Hello and welcome to Ipswich's Real Estate Podcast, a podcast where we help you navigate the often complex world of buying, selling and renting here in Ipswich and surrounding areas. I'm Steve Athanades. I'm the owner of NG Real Estate here in Ipswich and a number of other locations. I'm joined today by a very special guest, a very regular guest, a very important guest, because he always talks to us about the RBA announcements in terms of interest rates and what's happened. We're joined by Steve Beach from Stanford Financial.
Thanks for having me again.
Hello, Stephen. How are we?
I'm good.
Lovely. Now, mate, obviously, we can tell people at home it's the day after the announcement. It's come out. We had a prediction in relation to what we believed was going to happen in terms of interest rates. What was the decision?
Our decision was rates were going to be on hold. They were on hold again. I think that was, to be honest, a fairly easy prediction.
We're not taking too much credit for that one. Maybe Blind Freddy could have seen that one coming, but some of the other ones have been awesome.
So I think there's been a few out of the box that where a lot of people, even I've had a little bit of slack from work going, Steve, what are you going to do because you predicted wrong? And I'm like, well, we'll see, and then all of a sudden we were right. So I think I think it's something like 29 predictions correct in a row now. So
is that a world record? Is anyone out there? Is that a world record? That's a lot of correct predictions.
I don't know if that's a statistic that accolades, so people go, hey, well done. How much reading do you actually do behind the scenes to be able to do that?
Well, this is an information-based podcast, and our information is correct.
Yes.
So that's the main thing. So, yes. All right, so we were right again. Yay, but not great.
Yeah.
Obviously, now the commentary is the interesting point. This is, I guess, what we've got to talk about. Like I said, it wasn't going to be that hard to work out that they were probably going to stay on hold. What did the Reserve Bank governor say? Why did they stay on hold?
I guess when we look at just some of the basic data that everybody sort of relates to, which is the inflation data. So we actually went from 3.6 to 3.8, and with their underlying inflation went from 3.2 to 3.3. So we're seeing a steadily increase over the last 6 months of the inflation creeping back up, which is what they kept talking about at the start of the year when they gave us a couple of rate cuts, and they said we need to see it take 6 months for it to take effect. We've had the sort of 3 rate cuts, and now we're seeing that cause and effect where people going, cool, we've got more money we can spend because rates are going down, rents aren't going up as fast as they were. So there's a lot of sort of data around that. I guess to talk about the commentary, which is sort of, after the RBA announcement, Michelle Bullock gets up and talks to the press and then goes through her statement and then a little bit about question time. So all the reporters get to ask their pointed questions. And first and foremost was there any talk of a rate cut? She said zero talk. So no chance of a rate cut in yesterday's meeting, or we would say today's meeting. I guess the next thing was there talk of a rate rise? There was some commentary in part of the 2-day meeting about rate rises. But the board was unanimous in holding rates. So there was not one board member that actually voted to raise rates. This meeting was actually the first meeting of monthly CPI data, as recently we've been getting quarterly data. So like anything, even in finance with my business, we measure everything quarterly. So, you might have one really good month, one average month, one slow month, and overall it sort of pans out. So to be able to make a decision instantly on the first month of monthly data, I don't think they were ever going to make. And that's where that prediction of pause was pretty easy. I guess further on, more questions was around, do we think the government's expenditure and government, schemes are to play into today's inflationary data or yesterday's inflationary data? So one of the big ones was the energy relief that we've been receiving, so $75 a quarter off your energy bills. That has now ceased, so that will actually help sort of stem inflation a little bit. As bad as it sounds, means people have less money to spend per month. So there's been a few factors around those sort of questions. So.
Right. All right, so government spending, what about government policy?
So they didn't actually talk about it in the question time, but reading a lot of the articles and economic forums, we have seen, well, you would be able to probably contest to this, is originally they were bringing out the new Australian government 5% deposit scheme as of the 1st of January. They brought it forward and released it on the 1st of October. I've seen it from a finance perspective of property prices, raising probably 5-10% in the last sort of 3 months. Property prices are still going higher.
Still going up, yes. Still going up.
I was at a
Without doubt.
NAB forum with some of the state managers, and they brought in some of the analysts from Cotality, which is the company that organises valuations for banks. And they were talking about some of the data that was coming out, and just like, instead of going, hey, over the year we saw a 2%, 3% increase, South East Queensland saw a 1.9% increase in 1 month, so 2% in 1 month. And some suburbs saw 4 and even 6% in 1 month, property rising. So obviously increasing the cap from $700 to $1 million just instantly pushed all those property prices up, which just puts more people further into debt. So again...
Makes you wonder, how they didn't think this is what was going to happen. Like, everyone knew what was going to happen. The average punter knew that as soon as they did this, it was going to push prices up. And obviously we're on the ground selling houses all day, every day. And that's exactly what has happened. Over the last, we're 70 days into this new policy. We have seen house prices rise by a minimum 5. I'd say, I'm not even going to say 10's the maximum. There could be some suburbs that have maybe even got 11 or 12%.
It's crazy, isn't it?
So there's some big numbers. Now, even if you're talking $1 million property, if you can get a rise of over $100,000 in 70 days, frightening. That's absolutely frightening.
That's the annual wage for Australians at the moment is as an average is $100,000. So in 70 days, people on properties have made that.
And it definitely hasn't made it any easier for first home buyers, because the prices just went up. So any subsidies that could have been effective have been absorbed in additional house costs. So I guess history will judge this decision as to the viability or the sensibility of it. That's not necessarily our job, but what we can tell you is being active in obviously real estate and finance, we're seeing it. We're seeing it every single day where prices are rising. People are needing to borrow more money. It's affecting their affordability because their wage is not rising at anywhere near the same level as house prices. So it is a bit of a concern. Where is it going to go into 2026? You'll have to stay tuned to Ipswich's Real Estate Podcast to find out exactly what's going to happen in 2026. Now, Steve, when's the RBA meet next?
So it's the 2nd and 3rd of February. So we get a
we've got a bit of a pause because we've got Christmas and New Year, and they probably don't want to pop out in January when everyone's just blown a bomb on their credit card and whatever. So they're going to let it even out a little bit, and then they'll pop their heads up in February.
In February, and we should get some data towards the end of January as well. So which will then, I guess, indicate what's going to happen. Again, one of the questions was in question time when we're talking about Christmas was, should people, not buy Christmas presents and all that kind of stuff, or ease back their expenditure over Christmas? And she's like, no, everybody, just do your normal thing. It's a lot more than just the individual consumer expenditure.
Explain that to the kids, hey? The Reserve Bank government said no Christmas presents this year, kids.
Lump of coal for everybody.
Yeah, that's right. So. Yeah, so, well, look, people do have to go about their daily lives. At the end of the day, the world's not going to end, and it's not ending anytime soon. So, whilst it's, for some people, it's not great news, and obviously everyone would hope for more relief. At this point in time, relief is definitely not on the way, which then leads us to our predictions. What is going to happen with interest rates when they do meet in February? By that stage, they'll have had, obviously, a couple of months, so nearly a quarter.
Well, they'll then have the December quarter inflationary data come through.
Yeah, so they'll have the December quarter inflation figures and exactly what's happened over the 3 months as opposed to just one individual month. So we should get hopefully, maybe some evening it out. What do you think is going to happen in terms of rates in that first week of February?
I guess I'm going to be honest. It's been a bit of a flip of a coin with most economists predicting, some saying pause, some saying actual rate rises based on, we're seeing that sort of steadily increase in inflation, and it's not going to slow down in the month of December, let's be honest.
No.
Holidays, there's a lot of expenditure that goes through. I personally, I still think they might pause. I think they'll probably allow for some of the data to come through over the quarter from the month, and then probably make a more informed decision, because at the same time, there are a lot of people financially hurting out there. So, yes, there's expenditure going on, but there's also a lot of people struggling. So, the biggest thing that they don't want to do is allow inflation to continue rising, because that will increase cost of living. So, buying milk and bread will get more expensive. So everything goes up with the cost of inflation. So that's why they've got to stem it quite quickly. So,
look, I'll jump in and give my prediction too, and then we'll talk some commentary about what happens if they raise rates, because obviously it has a different effect, and it can slow the economy, and then all of a sudden there's a risk that we could, drop into recession and all those things. But we'll discuss that in a second. My prediction, Steve, I think you're 100% right. I think it would be pretty premature and possibly a little rash for them to make a decision so quickly when it affects so many people, when people are struggling with cost of living pressure. I think it's highly unlikely that they would raise them in the first reporting period for 2026. So my prediction is they will remain on hold. We then will see what the economic data says from the quarter and what happened in January, I guess, as a monthly...
Yeah, as a monthly statistic.
Yeah, it won't be good.
That bleep will be pretty bad, I will imagine. But as you mentioned before, what impact does, raising rates, like we saw that, sort of at the peak of COVID, where we started seeing rates going, ballistically through the roof, 13 rate rises, we've had 3 rate cuts, people saying, this is the shortest, economic stint of rate reprieve. So, I'm not saying that we're going to see a rate cut anytime soon, but I'm still not anticipating a rate rise straight away. I think they probably need to work on both factors, because as we raise rates, unemployment starts to increase, which then is the other flip of inflation. So they want to keep inflation and unemployment sort of at a comfortable level, which is that between 2 and 3 and around 4.5%. As the inflation goes up and then we continue pushing rates up, unemployment's going to go back up as well. So there's a few factors that I guess the RBA, they have a lever of pause, up, down. So they don't really have any other blunt tool than just to either raise rates, pause, or bring down.
We don't talk about the US and stuff a lot, but there is some interesting commentary coming out of the US about their housing market and some of the predictions that some people are saying could happen with their market. Have you seen any of those? I know Logan doesn't like you to talk about them too much. It's a fine area. But
I guess, you got the Federal Reserve, looking at their inflation's starting to pump up again, but they're still talking about cutting rates, which is what sort of the commentary we've been seeing in Australia is they raise rates a lot higher than we did. So, and that's what they talked about, that narrow path and soft landing in Australia. But, America is a superpower as well. When you think we've got 14 million working people in Australia out of a population of 27 million, you're talking almost 1 billion people over in the US. So there's a lot more factors that they need to take into consideration than we sort of do.
But you look at some housing markets like Florida that are just absolutely tanking, and they're talking about there could be crashes which were worse than what occurred in 2008. Yeah. So. Look, definitely not time to panic. Obviously, as prudent, intelligent individuals, we all need to keep abreast of what's happening around us. It doesn't mean it's happening to us today or anytime soon, but an interesting time, truthfully, an interesting time. So some of the, fortunately, some of the wars and things and that have settled down now, but, it would be nice to see just a period of continued peace, harmony, and everyone just gets along and, we all live our best lives. But it doesn't seem to be the way it works.
Christmas miracle would be nice.
Christmas miracle. There it is. Let's ask Santa for a Christmas miracle. Well, mate, did you have any other commentary about what, you see happening, anything that's relevant to people at home?
Not really at this stage. I think it's quite raw and I guess as we get more information coming through, Again, like I sort of said, we've got economists going, as bad as it sounds, I listened to one yesterday going, we can see 100 to 150 basis points increases, which is essentially between 4 to 6 rate rises. I think that's absurd. Versus other people going, I don't think they're going to touch rates for 12 months. There was one sort of economic forecast who was still predicting 1 rate cut towards the end of next year. It's so unknown at the moment. I think we have to just see what sort of impact comes through at this point in time. The RBA did forecast, to be honest, when we look back 3 months ago, they forecast that inflation was going to rise in the month of November and December. So they were predicting a rise anyway, probably not this high, with still forecast of rate cuts next year. So they're going to have to, I guess, amend those forecasts as time goes on, but it's still fairly unknown. I personally think they'll probably stay on hold for a little while, but a couple of the banks have recently just increased their fixed rates. No one's really touched variable rates, so variable rates are still remaining where they have been for the last couple of months, but fixed rates are starting to go back on the rise again. So again, I've said it multiple times, if you could fix a rate that starts with a 4 or 489, 499, I still think you're getting a pretty good deal when variable rates are sitting at about 5.3%.
Okay, well, interesting food for thought. Look, obviously, I think it is an interesting time. Obviously, just to recap, rates are on hold through to now until February 26. We'll obviously come back and catch up with you before then, just to give you an idea of what's happening in our market. We definitely, it's all good information to know. If you're looking to get into the market, we've been telling you for the last 3 or 4 years, when's the best time to buy? Right now. They're still predicting house prices could rise anywhere between 10 to 12% in 2026. So when should you buy a house? Right now, because if you wait 3 months, 6 months, 12 months, it could be anywhere between 3 to 12% dearer than it is today, and you all think it's dear now. So if you're looking to get in the market, you need to bite the bullet, talk to a qualified financial provider, mortgage broker, talk to them about your options, see how you can get yourself in there, save that deposit, get yourself into a house, townhouse, unit, whatever you can afford, get yourself into the market. If we're right and house prices went up 12% over the next 12 months, you would be 12% richer for doing absolutely nothing than being smart enough to buy a house today. So buy a house today and buy it from NG Real Estate, please. All right, guys, I don't have anything else. Now, if there's any comments, your comments and your opinions are extremely important to us. If you'd like to comment, please click the link below. We'd love to hear from you. Once again, Steve Beach, Stanford Financial, absolutely, amazing information, incredibly relevant. Your podcasts, generally speaking, our favourite ones where you come in and give us all the information. So thank you again for coming in.
No worries.
Guys, that's all I've got. I'm Steve Athanades. I'm the owner here at NG Real Estate in Ipswich and surrounding areas. We look forward to seeing you at our next podcast of Ipswich's Real Estate Podcast. Thank you.